Hello, it is the 7th of March 2011. Welcome to today's Silver Log. And a lot of stuff is going on, a lot to go over on this particular video. We'll start off with the SLV. I'll go through this in just a little bit, but also on today's video, we'll look at the recent rally, look at it through the daily chart, the 60-minute chart, go over some volatility, the comparison of 1979, a quick little update on that, on the curve, the 50-day low, all this type of stuff. But we'll start now within the SLV. And I have written on the top here that the SLV ETF has been very good at mirroring the price movements of silver. However, there are changes going on now. I am forced to change my rate from 1.0228 to 1.0245 now because something is going on. And many ETFs have this at massive levels. And what this is not really tracking it all that great. Back in the day when silver was $23.29 per ounce, I matched the price of the SLV, which at the time was $22.77. I divided those numbers together, which gave me the number 1022837. Now, this was going back quite a while ago in 2010, roughly into September, a time frame, maybe roughly around September, October was when silver was at this price, and I've had to do nothing to change it. It's been doing very well until now. So what I have on here are different dates where the silver market was at 4 o'clock Eastern Time, and the SLV market when it closed. And what's happening is the trend is moving higher, and this is not a good thing to see. What this means is that SLV owners are shaded by about 6 cents per ounce right now. And mainly what I'm going to do is just keep on tracking it and just see how this works out. Many other ETFs have done very poor jobs, like UUP, which tracks the dollar. It does a very terrible job in mirroring the Dixie, but we'll just keep an eye on it. Now, as far as the traffic on the Silverlog blog spot, it's continuing to grow at this exponential rate. This is a logarithmic chart with the amount of viewers that are coming onto the site. So thank you very much. It's been very exciting to see the gains coming into play. It won't be long before there'll be 1,000 viewers in one day at the blog. Also, what's really cool is how resistance is now becoming support on here. We can see here resistance, there it becomes support. And again, if this little area here, it looks like once again resistance becomes support, which is what I'd like to see here, where this becomes support into March and April. Anyway, moving on now to the charts. We'll start off with the daily chart. Things are looking really, really good. We are now making some nice gains. Things are starting to become a little parabolic towards the upside, as we have had a 100% gain within a few month period. And we're now at levels not seen again since 1981. And it'll be very soon before we start to say new nominal highs. And that'll be the key word, nominal highs, because inflation adjusted, we still have a long ways to go. But as far as this chart's concerned, we had this nice little run, or this nice little consolidation, another consolidation. So it's having a nice little gain. Obviously, previous resistance would be roughly around 35. And if we look at this on the hourly chart, this data comes from forexpros.com. The big level here, you can see, will we come back down to 35? That's tough to say right now, but obviously a nice bullish trend. As far as some key Fibonacci levels are concerned, if we take the lows of 3406, which is right in here, and the highs of 3676, we have a 38.2% Fibonacci level at 3573, and again roughly around 3509. As far as these lows are concerned, at 31 3/4, That gives us a 23.6% Fibonacci at roughly 35.5. What this means is if you can hold 38.2% from a given point, say this given point to this given point, then the market remains within a bullish state, and the correction, until otherwise notified or otherwise changed, remains within its current trend. And in this case, that would be that of bullish. If it holds the 61.8%, that's what it needs for the move to not be a failure. Therefore, for this rally to not be a failure, it's got to really hold above the level of $35.09. Now, if it goes through it down to 35, that doesn't mean that it's all over. It's a failed move, because you need to have a confirmation of the break below it. And we'll talk a little bit about confirmation a little bit later on. But as far as the volatility is concerned, this is the price movement, not just in the same time frame, the last few days on the hourly time frame. Don't want to really talk too much about this, other than it is picking up a little bit on the more recent time frame. And as well, don't be surprised to see these numbers really escalate. I don't know how much in the near term future, but right now I still look at this volatility as not high. I'm not going to say the volatility is low, but I'm definitely not going to say that the volatility is high. The volatility on the daily time frame, once again, we haven't had really any days, or hardly any at all, where it goes above 6%. This is the only 10% move we've had in a Coon's age on the silver market. So lots of non-volatile days back in 1979, 1980. These movements well above here were much more common. Now, as far as the Fibonacci upside is concerned, this is where I want to talk about the confirmation, because they're not making it really easy for me, and I didn't expect that they would. And I say that because in order to have confirmation, what I'd like to see maybe a pattern like this develop, where I can see, okay, there we are. Now we have confirmation because we came back down that level and we've had support. But what happens is, if you don't get support at the key area, then what do you need to have for confirmation? I don't think this move is quite yet big enough to say we've blasted high enough to state that we are going to be going much higher. I think if anything, maybe closer towards the 40 level, maybe, but that again is also tough to say again too. But as far as the confirmation on this, I know for the long-term time frame, we've pretty much already confirmed a move to 50. So I'm not going to put too much of a big deal into it, because the technicals really state we're going up to this area. Fundamentals state the same thing, pretty much as like a lock, if you will. At least for maybe not this year, but I came out with a video that $100 was likely this year, and when I say likely, that means greater than 50%. Moving on to the comparison of the 1979 rally with the current one that we're seeing today. As Mark Twain says, they don't usually history doesn't repeat itself, but rather rhyme. And I was stating the last time I seen this chart that maybe we go down a little bit before we have this move. Well, no, that didn't happen. Instead, the market is rhyming. We can see how we're really rhyming this little move in here, and what happened after this was an explosive move to the upside. So we'll wait and see how this plays out over the next little while. But the comparison, to me, it's still intact. A lot of the situational comparisons are somewhat close. That was back in the day of the 1970s. The Hunt brothers were very active within the silver community. Today, it's much stronger. It's not just one or two or three large investors. It's a lot of people who are waking up, understanding debt, understanding currency, understanding silver manipulation, getting all this information, and then buying a little bit, or some person buying a decent amount. I've always had a saying in my life that a lot of little things adds up to greater than one big thing. Thus, one big investors like the Hunts is not as big as all of us together buying into the silver market as we are seeing right now. Okay, moving on now. I've talked about this trend line before. Actually, this is only the second time I've really talked about this one, at least within this automated processing of this trend line. I'm not putting much into these lines, so I'm not going to say, oh, we're coming up to this line, that's resistance. No, I'm not going to do that. Because, I mean, I was just playing around with the data set numbers and I just put whatever in so that it had this nice little face. What I'm putting emphasis in towards is the rate of ascension, and realistically, if anything, it would be more towards the support that I'd be more concerned of than the resistance. If it does break well through it, then I'm going to see that as, whoa, this is getting pretty massive, and all the stuff that's supposed to be going on really is coming into play. Now, the last time I showed the 50-day direction on the low was on, at least to the 15-minute time frame, was on February the 8th. So it's been about a month. And we've seen back here that within this pattern, you really want to get over this 10%, and it was pretty much just starting to do it, stating, you know what, it's really looking like you want to get into the market. And obviously, the market has been going extremely high since this point, and now since then, we can see perfect support at resistance, and it's in an uptrend. So if you're looking for this indicator to get in again, it's too late by using this. You really need this to pull back down below here again and then find yet another breakout pattern to use this as an indicator. But you can use the polarity of this. Instead of using the direction from the 50-day low, well, we can put in the direction from the 50-day high. Now, before we go to this chart, I just want to point out, look at these numbers, 60, 50, 40, 30, 20, 10%. It'll be important. So this is the direction from the 50-day high, the highest point we've seen in the last 50 days, which is 37.53. Really, it's actually 37.59 if you count what SLV really was because of the problem I talked about at the start of this. But however, though, it's also a high that we've seen last roughly around a few hours ago because we made that new high today. But we notice on this chart here, the way this would work is when this is starting to break out, you would short the silver market. The only problem is it just stays at this bottom level. It's impossible to ever go below 0% because if you are going to go above the new high, then that just changes the high. So it's impossible to do. And notice that the highest variable here is 16%. As I was saying, the last one was into 60. And the secret is really, from what I'm noticing within this, is you really want to buy on a breakout above that 10% barrier. So if we're looking for a good opportunity to short here, this is where we really needed to find an area to go higher so that the shorts would work. Well, it didn't happen. And then again here we break 10%. This was in the January selling. But notice that when you came back down here for liftoff, it did not happen. And what we'll do is we had a 60% top on the upside one, or from the 50-day low. We'll do the same thing here again, and this really shows you how unactive that the sellers are within the market. It will get above this at some point, but until then, the market's going to remain bullish. It's going to remain in an uptrend. So I'd like to thank you for watching this. Check out the blog. Lots of great stuff on there. And have yourself a magnificent day, everyone. Bye-bye.